Hey traders, this is Christian from Hertz Tribeca Trade Group, and it is Tuesday, March 8th, and this is your end of day recap. Risk disclaimer, where is that? There it is, right on the bottom of the screen. Please make sure you read through the whole risk disclaimer, but essentially everything that we're talking about in this video is for information purposes only, not giving out any advice or recommendations. So we will go through and look at a couple bright spots in a pretty ugly market overall once again today. So there's a couple things that I want to talk about in tonight's video. First, we'll talk about the price action in the indices. And then we'll talk about the commodities, because I think the commodities are now kind of what everybody's, jumping into these days, right? It's the hot trade right now. We're hearing just about every day a different metal that is, a different commodity that is really running. But I wanted to talk about that, right? Today it was gold and silver, which had a humongous day for these. So let's talk about the indices first, and I'll come back to those, and I'll talk about a couple of the bright spots for this market for today, for a little bit of silver lining and a pretty nasty market, pretty nasty tape. Here's the price action for the day. We really didn't do too much here in the first couple hours of the day. There was a headline that was from last night, which, it is what it is. Right now, this is where the market is moving on a lot of these headlines, right? That is nothing new, and we will probably continue to kind of move on headlines specifically around, what is going on with Ukraine and Russia, right? So that's what kind of drove us up there. I'm not going to, you could research what headline it was, and I'm not going to spend too much time there, but yes, you could see what the reaction was. We did make it through, we made it all the way through the value area, and that was basically it for the day. That's kind of how this market is going right now. These little bounces that we're seeing in the market, they look great for like an hour or so, and there's not a lot of follow through on them, and they actually end up being, opportunities to either take profits if you've added in somewhere in the red down, on the price action. You have to basically be positioning that you're going to take the position off into that strength, or at least a good chunk of it, in order to kind of make profits on the trade. Or, which a lot of people are doing too, is just shorting on these bounces, right? And that's worked pretty well too, right? If you've basically said, hey, resistance, right? Here was the one from the other day, right? Or was this yesterday? Or no, this was the start of the day yesterday. We rallied right up to the top of value, and that was right at 9:15, 9:30 in the morning. And then that was it. Right. So similar type of concept, not as big of a move, but another move. And there was a medium bounce in here, lower bounce. And then that was kind of wiped out for the day. We did not take out I guess it's the overnight lows of last night, but pretty, not too far away from that. So let's back up and that's just the 5-minute bar, just to kind of look at the price action. If we look at the daily chart in the S&P, whew, that does not look good. So especially when you zoom out, right, and see the overall pattern that, the trend has been breached. We regained it for a couple of weeks just to rewind a little bit. And then, as I've been saying in these videos just about every day for the last week, we've been making lower highs, right? And we haven't really been able to find a solid footing. And we're coming into this hammer bar. And we don't know if this is going to be like a place that we can kind of bounce from, or if we kind of violate those lows and continue to go lower. And again, this is just the S&P. Also note again that we're below value, had difficulty with the 20-day moving average, and have basically been straight down since that move in the 20-day moving average, except for those little bounces in between that I've mentioned. So that's the story. And so, keep in mind right now, this market, it is in a downtrend, and you kind of have to think about it differently, right? And I think a lot of traders have adapted to this, where now that we're in a downtrend, you're shorting bounces. So that's one thing that you could do right now in this market, provided that we get another bounce, is to think about shorting that again. That's one way. Or if you're not a big fan of shorting, then it's just to kind of, do what I had just mentioned. As soon as you do get a little bit of a bounce, if you've got some resistance, even if it's on a 5-minute time frame, it's been a good place to sell. And if not, if you're waiting for something more substantial, then I think you just have to be patient with overall equities right now, right? And that's just kind of how it is. Nasdaq, the same thing. We have not taken out the intraday. Remember, the close was here, intraday lows here. We also have a VPOC down here at 12,850 in Nasdaq futures. Excuse me. Or if you want the level in the Qs, which I know a lot of people look at the Qs, that's going to be further down. I don't think there's a VPOC right in here. So again, has to do with the different volume profile between the futures and between the Qs. So I see 291 when we look at the Qs, but I think that we don't necessarily, I mean, that's pretty far away, but I do think the possibility of this VPOC, which I just saw this on here. Maybe I should use the 20-year here. Oh, there it goes. It just, sometimes it takes a little bit of time. So yeah, that's at 12,857, which is really not that much further down. That could be the way that we're moving this fast. That could be to the downside. So, you know, those are some things to kind of to think about. And IWM, which is the last one, that also finished positive for the day, but it's kind of in more of a negative sign that we try to get back into the value area. Notice that we broke the March value area yesterday, and we try to reclaim it today. And of course, we're not ready to do that yet. The price action is not ready to do that, and that was got to around 199, and then kind of came all the way back in on that second move down for the day, basically right to where we opened. All right, so that's the negative of this, and there's a lot, you know, there's a lot of negatives right now, and it just kind of tells me to be patient with this market, considering that the technical picture in these indices just does not look good. Even if we rally a couple days, it's probably going to be a little bit of a rally to take profits into, right? If you've positioned for that. All right. So that's what I'm thinking. And again, the reason why I say that, just to kind of back up my statements here, is because even like if we rally back up to here, right, that's probably going to be a level to think about fading, right? But still, it'll still be a nice, you know, trading move. All right. So let's talk about, so one other point that I wanted to mention before I go over and talk about gold and silver is that when we look at the VIX, right, which again, this first part of the statement about the VIX is not a good thing, right? The level is very high in the VIX, and we've been elevated now for a while, which basically is telling you that we're just in a higher volatility regime, right? This volatility is staying present. It's not coming out of this market right now. But you know, the one positive that I saw for the day is the VIX was actually down on the day, down 3.6%, right? Remember, the VIX is not really people like to think when they say, oh, it's the fear index, that there's something else that the VIX is doing. But really all the VIX is doing is measuring short-term implied volatility. And that time frame is 30-day options, right? There's nothing more than it's doing, right? It's a calculation based on what short-term options are pricing at in the S&P, right? There's nothing else that the VIX is doing, right? So I always get, whenever I make a statement, because I'm not an expert on the VIX, but I know what it is and I know what it does. But whenever I make a statement about that, somebody's like, oh, somebody's messing with the numbers, or, you know, it's not. That's all that the VIX measures, right? So it is a little bit of a divergence to see the S&P down, right? Normally it's an inverse relationship. So when the S&P is down, normally the VIX is up. So the fact that the VIX was down a little bit is one positive that you could say that, hey, maybe we're getting closer to a bit of a bounce. Again, what you do with the bounce, I think, is important right now, right? So I'm just kind of thinking ahead a little bit. And why am I thinking that? You know, why am I saying bounce so many times? Because I do think we're getting closer to where that bounce is going to be. Could we see another down day tomorrow? We definitely could, right? I mean, we could definitely get a little bit more washed out. But as of now, like I don't have any short positions on. I've got one position on in the TTG trend portfolio as a hedge, right? I'm long a little bit of SARK, you know, as a buffer for this market, but I'm not outright short anything right now because I don't think the risk reward is very good. after a multiple day move down, right? And that always comes back to, risk versus reward in this market. Same thing if the market was up 3 or 4 days in a row. Would I be looking to kind of really press longs there? No, I probably would still have some positions on, because that's generally how I trade, right? To have some swing day positions, but I wouldn't be looking to add like anything additional after a 3 or 4 day nice rally. So that's how I kind of think about it in terms of when we see downside price action like we have over the last 3 sessions. Okay. I keep alluding to the point that I'm going to look at gold. So keep in mind with all of these commodity moves, right? They do, I've seen a lot of questions about, hey, I want to get long gold here, right? Over the today specifically, you have to be careful just with anything after it's rallied multiple days. This is now a really big rally in gold after the last 3 days. If you really do like gold, and it's funny because a couple of weeks ago I was posting gold charts and I would get crickets on these charts. Like I would get 3 or 4 likes. And I was like, really? Like, you don't like this setup here that's going on in gold right now? It looks pretty decent. Break out of a thin value area, narrow value area, right? We've been talking about this now for the last couple of weeks, but now I'm getting questions about putting on gold. And anything that breaks out like this, again, you have to think about your own strategy is, and okay, if you're going into gold after a multiple day rally like this, where do you think it's going? Like where's your exit point going to be? Scaling in is something else that you could do a little bit too, if you really have FOMO at this point. But I think like from what I do in my strategies, right, I was a seller. I sold my gold mining position. I had a silver mining position on today too. I took that off because this is a 3-day move since we've broken out of the value area. So we could see a 4th day and it could get bigger. Who knows? And I still have, a gold GLD position on in the TTG trend portfolio that I'm going to stick with the trend. But I'm saying like I wouldn't be adding a new position. Right after a 3-day rally, you're late. It is what it is, and I hate to beat around the bush, but you're late if you're looking to add gold at this point, right? After a colossal move the last 3 days, right? So let it, and again, I'll say it one more time before I move the chart. If you really like gold, let it consolidate. These things usually, if they're going to really trend, they're going to consolidate a little bit. Right. I think we saw that in the food stocks a little bit. Right. So this is veggie. Right. Here's the move that we've seen. Look at what this did today. Right. So this is all the agriculture names, or you could look at moo. Right. Look at them kind of come in after a big rally. Right. So, CF has been my champion. Right. It's great initials. But would I buy CF after this move? No, let it come back into the 20-day moving average. Or if it doesn't come back into the 20-day moving average, maybe halfway in between, right? Even though they all saw call buying yesterday at the very top of, the move. Now they've been seeing call buying throughout the last week or so, but this NTR, it's up 94. The breakout was around 77. So let these things drop in a little bit, right? Same thing with the energy stocks too. I hate to say it, and I think XLE was still up today, up 1%, but give them a chance to consolidate, after they've been hot now for multiple days. So yes, the commodity theme, I think, I'm not saying that the commodity theme ends or anything like this. And I'm very happy with what we've seen in terms of the moves in commodities, because I'm just happy that something trends, right? For a while in the beginning of the year, we had everything moving to the downside, right? There were no bright spots, or very few of them. So it's nice to see. I'm fully on board with the commodity move, but at this point, let it come in a little bit, right? And you got to think about, hey, something rips, take some profits, let it consolidate, maybe put it back on a little bit, see how the retest goes, or the consolidation, maybe a move back into the 20-day moving average, right? But yeah, so that's what I feel, in terms of gold, silver. And again, here's my trades. Like I'm not, I've been taking profits in these things this is yesterday's trade blotter, All right, so you saw me take some profits in things like GDXJ and NOV, which I was long, right? I took, NOV off a little bit early. That's fine. I didn't get the whole amount of profits on the trade that I could have, but it was still a really nice profitable trade for me. GDXJ took this off. WPM, I was specifically looking for 49, right? And now we'll kind of see if these things come in a bit. Here's WPM, right? And again, price can get above these virgin point of controls, but look at the candle for wheat and precious metals today. Wait for this to fill in here on Thinkorswim here. There we go. All right, so that looks a bit toppy to me. Now, it doesn't mean just because you have this type of a candle that we lose the trend, right? We've seen that a couple times with oil, right? We had a very toppy looking candle yesterday in oil, but it stayed the trend. So, you have to kind of wait to see if it's going to actually happen. Thinkorswim really doesn't like this ticker, but I took profits based, I mapped out, I used the market webs for a roadmap, right? And I took my profits right in here, right after the break higher. Right? And then we'll see again if this wants to consolidate a little bit after this, because the multi-year chart looks pretty good when you look at these groups. All right, so we talked about that. The group that we looked at pre-market today, which I'm happy that this worked out this way, was the solar and clean energy group. And these things were up huge today. So again, a little bit of a bright spot for the day. Right, here's a solar ETF. I thought this little pullback was kind of cute that happened. Right, you had a big, nice green candle from the lows, and a bullish divergence in the RSI. Right, and you had 3 or 4 days. So here was nice little consolidation. The volume was lower on the consolidation, kind of picked up a little bit there yesterday, but nice move today, up 9.3%. And so I'll talk about what I did in terms of my trade of the day. But we did take out this 1 hour VPOC. Right, there's another one up here at right around $79. Right, which is my target for the swing trade that I'm in, right? But I chose SEDG. We were looking at these names pre-market, right? We were looking at CSIQ, because even though some of these names are a little bit of expensive, I don't think CSIQ is one of those names that's really pricey. I think the PE was around 23 when I looked at it earlier, but it did get above the 200-day moving average. So I see 39.17 as a level to get this to. But as oil gets more and more expensive, right, some of these solar names should act a little bit better as a substitute, right? And again, I'm not an expert on what the substitution price is or anything like that. I'm just watching the price action, and I thought that this was pretty good in CSIQ, right? And what I generally do when I'm going through, if you look at TAN, for example, it's below the 200-day moving average. So it is still in a downtrend. So what I like to do is look for the stronger names within the group. The one that I liked, which was, very flat 200-day moving average, but at least it's above it, right? And I took profits in this, and I took my profits and I moved it over into the solar ETF for now, because I just thought it was such a big move for the day. But it could get up to 352, which would be another upside area. So maybe something that I go back into tomorrow. ENPH was another one that I did not trade this one. We talked a little bit about it in the pre-market TTG pre-market session today. But this one I didn't trade because I just thought it might get hit by that, or might have to get through that 200-day moving average. But again, it's nice to see a group and a bright spot for the day. All right. A couple other names just to kind of tell you what I'm looking at, right? Because I talked about how that I think that the indices are kind of setting up for a bounce at some point this week. Timing, try to predict that is very, very difficult. But I think that we're, even if we go down one more day tomorrow, I actually think that would be a good setup for Thursday. Right now, again, I don't know if that's the case. You might get the bounce day tomorrow, right? But it's important to know what to do with that. I am watching some of these cyber names, right? Normally, and it just kind of tells you how difficult this market is right now. and how how unhealthy it is looking, right? And I want to show you a couple more negative things. For one more negative thing, which I don't know if I talked about this in yesterday's video. I do a lot of videos, so sometimes I get confused on which video I mention it, but this is credit spreads, which are getting wider. Now, the overall level isn't anything compared to what we experienced back in March of 2020. Right, but it is starting to act like it's changing its trend here a little bit, and the spreads are getting a bit worse. And we are seeing some put buying and things like, we saw a big spread go up today in LQD, which is investment grade bonds, kind of the a close sibling to HYG, which is high yield. Right. So, that's another negative. And again, it just kind of shows you that there's some structural issues, that are starting to appear in this market. So Palo Alto, right? Normally in a very healthy market, you would see a pullback like into the 20-day moving average, and buyers would come in and kind of scoop that up. It's a little bit troubling that it's not. Now, what I would like to see is a move back above 536, which is only about $9 away. That's one that I'm watching. Also, another one that was really strong in the group was Checkpoint Software, right? Notice this is into the 20-day moving average, right? So right now with this market, and I've talked about this a lot too, this is a market to be monitoring things, not taking a position and not being like a gunslinger in this market in terms of swing trading, right? It's better to just be kind of observing. And if you want to start a little position for a swing trade, that's probably the right way to do it. I find that I'm trading more starter positions than anything else right now when I try to put on a swing trade, because it's very difficult. Listen, I got stopped out in UNH, right? Here's another false breakout, right? UNH into the downward trend line, right where it's supposed to kind of take that next leg higher. And I even stayed with it. I thought, okay, well, maybe if it consolidates around here, top of value. And I stayed with it a little bit too long. I decided to get out of it at the end of the day because it broke the 50-day moving average. So sometimes these things have a way of coming back when that happens. But for now, I'll focus on this name again when it's acting a little bit better than that. Right? The name of the game right now, where I'm finding success, is to really not stay married to positions. Right? And if they're not working, and I know patience is part of the game too, but right now accumulating positions is not working well in this market. All right, guys. So that's it for today's video. Those are a couple things that I'm watching tomorrow, and and just looking for some more bright spots versus more negatives, which we certainly have a lot of. All right, hang in there, guys. If you're having a tough time with this market, be patient. And just remember, with the commodity plays, many of them are overbought here. I think letting them kind of consolidate might be a good idea here. Have a great night, everybody.